you're about to lose 2/3 of your pension. It pretty much looks like it, but under certain circumstances. Under the UK budget, there is, and this is from the Express and it's widely reported, there is a 67% double death tax, inheritance tax, basically, penalty if you fit into a certain category. Now, that category is you live over 75 years, it's not going to your spouse, and your nil rate band is used up, and it's the inheritance part of the pension. So assume you've not used up all your pension, you were thinking of passing it on, for instance, to your kids, and you live over 75 and high rate tax and all the rest of it, then under certain circumstances, it's 67%. And that makes sense for Labour because, of course, they're more left-wing, which is and I'm not talking whether that's right or wrong, I'm just saying they would want more assets not to be distributed within a family structure. They would want it going to society to redistribute wealth, okay? Whereas more right-wing would want the family to be the basis of inherited wealth, and the presumption would be the individual is the one who earned the money, and the individual should be the one who decides where it goes. Okay, so you sort of see how this policy fits in. Now, the bigger worry is, well, what does this mean for your pension? Well, for me, it's the same as ever. I need to improve performance and make sure my performance of my pension does well, because saving more, well, how much more does anybody want to really save? They want it to work harder for them. You can download a free copy of that from alpeshpatel.com/links. Okay, one of my 18 books. This one's had great reviews from multi-billion-dollar hedge fund managers, Bloomberg TV presenters, and Financial Times columnists. So you'll want that one, okay? Now, the next thing on all of this is, okay, we need to improve performance by making sure we're not just giving our money to St. James's Place or a wealth manager or fund managers who just piss it away and do great underperformance, deliver great underperformance. We need to be in control of it, and that's more important than ever. Okay, previously you could think, it's all right, doesn't matter, the fund manager and the wealth manager is underperforming, but it's okay, they'll catch up. Well, no, because we're living longer, so more people are going to be living over 75. That means that 67% is more likely to hit. But there's another problem with this. Once these taxes come in, they rarely come down. Certainly, Labour is not saying this is a temporary measure. Now, the Conservatives, when they raise corporation tax, for instance, from 19 to 25%, this is a temporary measure. We want to eventually get it back down to 19. It's not the case with Labour. And when the Conservatives come in, it's highly unlikely they are going to say, yeah, we're going to remove this. First of all, it's a lucrative tax for them. So the direction of travel is clearly to make more and more people captured by this, maybe even make things worse in the future in terms of more tax. So what I would say to you is this: performance in your pension is more important than ever. So have a look at alpeshpatel.com/links, not just to download the book, to learn more on how to get more for your money, more for your pension than you probably are at the moment, because I suspect your wealth managers, your RFAs, your pension fund managers are doing a pretty piss poor job. Okay, so that's the first thing. And the second thing is, do plan that this is not temporary. This is going to be permanent. And if anything, the direction of travel will be that they won't increase the tax-free allowances with inflation, so more people will fall within this. And as I say, the most important thing to do will be to improve your performance. There might be other things you specifically could do, like you could gift certain amounts from your pension tax-free, then live 7 years, etc., etc. You might create some kind of trust. Well, speak to your financial advisors on all of that. But in terms of the area I'm a specialist in, which is investing, that you need to move the needle to make sure you're getting the most out of the companies that you're investing in. Now, to give you an example, in the last 12 months, the NASDAQ is up 30%. The S&P's up pretty much 30%. I think it's about 28%. Last year, the NASDAQ was up 55%. If you're not grabbing those kinds of returns because you don't even know where to begin and what to do, then you're going to be ending up with not only a poorer performing pension, but 67% of it gone on top of it. Now, if they're going to take 67%, I'd rather they took it out of a lot of money than less. The more they take, at least there'll still be something left for me, my children, and so on. Okay, that's the way to look at it. So have a look at alpeshpatel.com/links. And I look forward to speaking to you soon. Don't forget to like and follow as well. I'm going to delve deeper in future videos on exactly what's going on with pensions, tax, and all of those things. Thank you very much.